Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, gold is still behaving like gold, means crazy. And we can see that still we have good amount of volatility in the market without any clear direction. And if we look at the market sentiment also, we can see that there is not much clarity about the direction. Maybe market is waiting for a big fundamental factor. And as we all know that the tension that is going on middle is also having a huge impact. So if you love to trade on gold, stay in touch with the news because anything may happen. And gold has been acting crazy of late since NFP. So my dear friends, use proper stop loss and proper risk management because one bad trade without stop loss can be disastrous for your capital. Okay, so let's get started. So let's look at the market sentiment first. Gold is just below 2390. Gold is below 2390 per ounce on Wednesday, extending losses from the previous session, weighed down by renewed strength in the dollar and higher bond yields. Still, the metals upside bias remains intact, means overall trend is still bullish, driven by expectations of multiple rate cuts by the Federal Reserve following weak US economic data. So this is the market sentiment. You can see that overall market has been crazy. The present trend of the market is under the dominance of sellers. But if you look at the overall trend of gold, then we can see that overall market is still bullish. Okay. Gold moves lower as dollar and treasury yields rise following Monday's market turmoil. Yes, dollar, maybe the correlation between gold and DXY is not back candle to candle, but overall the impact can be seen because if you look at a chart of DXY, my dear friends, you must be knowing that after NFP, after the weak data, there was a big fall on DXY, and okay, we saw a good amount of upside on pairs like Euro USD, GBP as well as um, on gold for some time. Okay, but right now DXY or US dollar is trying to recover. Okay, so if the recovery continues, okay, then we may see further pressure on the chart of the gold. Okay, and let's look at the higher time frame. See, this is the weekly chart of gold in front of us. Okay, you can still see that on the weekly chart market is still standing at the top, and if market really needs to go for correction, then we need gold below this level here, or at least we need gold below 2300. Then we can expect that there will be a good amount of correction. As long as gold is trading here in this particular range on the weekly chart, chances of market going for a proper correction towards 2100 is very less. Okay, the weekly closing is going to be important. And if you look at a daily chart, okay, you must be knowing that gold has been taking support around a 50 moving average, and gold is slowly approaching 50 moving average again. But personally, I think that this time market may not take support around 50 moving average. Okay, and this is the Forex chart of gold in front of us, and on the Forex chart also we can see the market is taking support around the 200 moving average, and or at this moment right now market is standing at the 200 moving average. Market is trying to go up from here, but in this market situation I believe that there is a further room for downside because overall the market sentiment is not very positive. So if gold goes down from here, I will not be surprised. So if you have already taken a buy around this area, you can be on the buy position. But if you see gold going below 2384 or yesterday's so not yesterday's, okay, below this candle of 2384 okay, you can exit. Okay, you can exit below this candle. Now let's discuss the trading opportunities. Okay, you can see that already I have drawn many things. Okay, so stay sharp, listen to me carefully. Now we are back to our beloved hourly time frame. So on the higher time frame like daily and weekly, we can still see that market is overall in uptrend. On the Forex chart, we saw that market is standing at 200 moving average, but chances of market going for complete reversal is less. So we need to stick to say our safe trading strategy, which is level to level trading. Okay, now let's try to understand all these lines one by one. So first of all, the big resistance of 2480 2484 is still very much valid, but let's not waste time discussing about this level because this is far away. Okay, where is the next support on the chart of gold? The next support on the chart of gold is around 2350 to 2357. The blue box that I have drawn here is the next big support on the chart of gold, because market has already taken support around this area. We can see. Therefore, we can expect that if market drops, the buyers around 2350, 2355 will come for rescue. If not a complete trend reversal, at least we can expect that market will go for a good bounce. As a day trader, we can look for a good buy around the area. And personally, I believe that this is not the ideal situation for swing traders again. Swing trader, if you are a swing trader, then you must have observed that most of the time I am saying for the last couple of days, a swing trader, this is not the ideal time. Why? Because gold is not the ideal chart right now. So if market comes to 2350 2355 area and market takes support, we can go for a buy. Whenever you'll be going for a buy at on gold, okay, your stop loss should be below 2350. Suppose you are taking a buy at 2357 also, your stop loss will be on 2348. Means the stop loss will be huge. When you'll be going for a huge stop loss, big stop loss, you need to reduce the lot size, because you cannot compromise with the stop loss. For example, you are going for a buy at 2356 or 2357. You cannot think that I cannot go for a stop loss of 2348. No, stop loss is a zone in the market. You cannot compromise. Okay, if market is asking for a big stop loss, you will have to give it. Otherwise, your stop loss will be compromised. Okay, so 2350, 2357 area is a big support. If market comes, we can look for a buy position. We have another support around 2370, 2364.25. Today you can see that all the support level that I'm giving are big zones in the market. Sorry, I cannot help it. Because this is the level where market took support last time. Market showed a big bounce. So if not a big bounce like last time, at least we can expect 2 or 3 candles around 2370 2364.25 area. Okay, so these are the only two support levels on the chart of gold where we can look for a buy position for the day. And if you look at the economic calendar today, we don't have any news also, so we can expect the ongoing market sentiment to remain. If that happens, this support level should hold, but low level is permanent in the market, my dear friend. When market will come to the support zone or market will come to our zone, observe the market first. Okay, if market takes support, if you see the market is showing price rejection from below, then only go for a buy position. After all, it's about our hard-earned money. We cannot trade blindly. Okay, now let's shift to the 50 minutes time frame. This is the 50 minutes chart of gold in front of us, and we can see that market, okay, has made a low of 2378.84. Okay, so whatever levels that we are about to discuss, okay, are risky levels, so please be careful. If you can score 30-40 pips also, I think good enough in this market situation. Okay, so during the European session or US session, if gold breaks 2378.50, the low made by the market, we can look for a sell below this level, because we can already see the structure of the market is not very positive. Try to understand the logic so that you can apply the logic later on some other charts. Okay, this is how you can learn also. So if market breaks 2378.50 area, the low made by the market, we can look for a sell, because the structure of the market is not very positive. Okay, and if market goes up from here, okay, my dear friends, if market goes up from here, then okay, let me remove this line here. We are using FIBO to find out the trading opportunities. Okay, now see, while drawing FIBO here, okay, we have many levels on the chart right now. So let's discuss one by one. So first level is 2394. So before the US session, okay, if gold goes up, as a day trader, you can also look for some selling opportunity around 2394 area. Okay, the second selling opportunity will be around 2398 to 2400. and the third selling opportunity will be around 24 2403 2405. You can see at 2394 area we have FIBO 38.2% retracement level and also the 100 moving average coming down. But all the opportunities are on the lower time frame. See, lower time frame give frequent opportunities, but they are also little unreliable or less reliable. Okay. So 2394, okay, we can look for a quick sell opportunity if market shows price action from above. The second selling opportunity will be on 2398 2400 area because of FIBO 50% retracement level, and market has shown price rejection also around this area. And then 240305. All these opportunities should work before US session only. Why? Because US session will bring volume in the market. When volume comes, less reliable levels do not work. And if you're already holding a sell position on the chart of gold, you can hold your sell position as well. Okay, so my dear friend, on the chart of gold, the levels that we have are not very reliable right now. Yes, we do have some strong support levels that we just discussed, like 2350, 2357, 2364, 2370 area. But the selling pressure is a little high right now, because of which we cannot expect a complete trend reversal. But as a day trader, we can at least expect a good bounce. Okay. On the other hand, if market goes up before US session, we can look for sell around the FIBO levels of 2393, 239394, 2398, 2400, 2403, 2405 area. Okay. And if market breaks 2378.5 by the European session, US session, we can consider it as a breakdown and we'll look for a sell as well below this level. So whatever you do, follow proper risk management because market is unstable. Again, I'm repeating, my dear friends. Okay, there may be many trading opportunities in the market, but we should not forget that our capital is limited. Capital protection is our first priority. No matter how good a trade looks, but there is no 100% guarantee about any trade, no matter how strong the level is. Okay, so you should follow risk management, uh, or you do your proper calculation for each and every trade. Okay. So that's all from my side, my dear friends. Thank you so much. Bye bye. Take care.